Okay, Joe, go ahead. It's your show, man. If you can't do it, I'll jump in.
Okay. So I'm Joe from Untitled chair of the Palm Beach Treasure Coast chapter, and today I'm presenting, or Elliot Chun is presenting. He will be basically letting you know what we're going through. Tariq, can you go ahead and do the opening ceremonies?
Okay, welcome everybody. My name is Tariq Malik. I'm the chair of chair of Fort Lauderdale chapter. Joe McGee is chair of the Treasure Coast West Palm Beach chapter, and we were supposed to have Javier as well from Miami chapter. It seems like he's kind of delayed and so on. Joe's microphone is not working, so he's giving me the privilege of speaking. I would rather him speak, but here we are. So with that, I think we're not going to do any introductions right up front. Then speaker has to wait for a long time. So what I suggest we do is, if you have questions, and you can do a very brief 25 or 20-second intro about yourself, and we go from there. So thanks to everyone for joining us. And I will introduce our speaker for today, Elliot Chun. I have not practiced this, so I'm just going to read it. Elliot is the founder and team leader of Emergent, a company which provides all sorts of technical guidance on artificial intelligence, Internet of Things, and all sorts of other things. I will leave it to Elliot to do his own introduction. Please, Elliot, if you don't mind.
Thank you, Tariq, and thank you, Joe, for setting this up. Charlotte as well, and hello to the South Florida area. Great to be here. I have done one of these for the New York chapter when we were doing things in person. From a background perspective, 20 years in capital markets, sell side, buy side, and consulting, 10 years on the buy side, 8 of them at a firm called Perella Weinberg Partners, where we set up an alternative asset management platform that supported any type of investment fund. From there, I had realized how quickly the velocity of innovation was happening, particularly when you looked at the New York Stock Exchange, which when I was there in the late 90s, went from what it was to within 10 years, a glorified TV studio. And when you think about how quickly 10 years is and how quickly things change within that time span, I decided that it was vital to go out to the frontier of technology, which at that time was blockchain and digital assets. And so since beginning of 2018, I've been navigating through that space. It's been a very intimidating change. It's been very difficult being a business person going into a emerging technology space. The lingo is, in the late 90s, we had a hard enough time with the internet. And if you can imagine in 2021, what people are talking about now in terms of how technology is being leveraged to improve what I would say every single part of our life. And so today, in doing these types of sessions, I found it to be extremely beneficial for those that are here listening to be able to participate as much as you can, right? So what do I mean by that? This should be a conversation and not a presentation. This should be an engaging discussion and not me talking at you. You guys aren't going to get any benefit from that. There are a few topics that we can cover, and I'm happy to bounce around from whatever that is. So in payments, so think about how emerging technologies, and we'll just stick with blockchain and cryptocurrencies for today, but how they're being leveraged in payments, remittances, identity, and KYC AML. Bitcoin as a treasury management strategy, which has got to be top of mind for financial professionals like yourself. questions around central bank digital currencies, which is a little bit far off, but with China where they are, could be here sooner than we think. Things like financial settlement systems, think JP Morgan coin, or even stable coins, things like that, or even a hot new topic that has really hit the space, non-fungible tokens or NFTs, and what that impact could be on the finance side. So, net, I'm here to help this group better understand what is happening. There are no dumb questions. There are no bad questions. And many times the questions that you have are going to be similar to someone else on the line. So I'll do my best to answer those questions. And then this conversation, I'm sure, will evolve pretty naturally. And the intention is for everyone here to get this to be the best. Now we have 50 minutes, the best 50 minutes that you've spent on this topic. So with that, I'll open it up broadly to say, is there anything top of mind given that framework that people have questions on?
Hey, Sean O'Shea, question really in terms of this, the NFT, which is the non-fungible tokens, which is coming like gangbusters here over like the last 3 months. And, it seems to be two elements to it. I can see where the non-fungible token in the context of actually putting it with something that was actually tangible to give it like a degree of certificate of authenticity makes sense. The amount of froth around things like Jack Dorsey's tweet and people buying and selling, basketball clips at this point just seems like froth. And at some point, I'm expecting some kind of I would say a shakeout of realism. The question is just how soon that's going to be. What are your thoughts in terms of really just kind of that spectrum from it being tied to something that actually is tangible and non-fungible to something that is just digital and ether and has no other real representation other than its intrinsic artistic perceived value?
Sean, I love that you start with NFTs. I didn't think that's where we were going to start today, but I love that you start with it. Just to step back for everyone on the line, there's been a lot of news on the NFT space or non-fungible tokens. Just generally speaking, non-fungible token is something that is different from something else. So dollars, bills are all fungible, right? If they're on the ground, you pick one up, there's no difference between that dollar bill you picked up and another dollar bill. If you had the same example on baseball cards and there's two baseball cards, but one of them had an autograph on it, you would say, wait a minute, that one that has the autograph is very different than the one that doesn't. And so if you look at that, that is where you kind of define the differentiation between something that's fungible and non-fungible. So the use case, Sean, I think is what we need to pay attention to. The market frothiness is always going to be difficult to tag whether or not it is appropriately valued in this cycle. So for those, Sean had mentioned a couple of use cases that we're seeing. The first that he mentioned, or one that he mentioned, was the use case of what's called NBA Top Shots. So think of these as the 2021 versions of a basketball card. And people that used to open packs of cards, and hopefully they're going to get a more rare card. This is very similar to what is being done with the NBA. And what the NBA has done is they are saying, we are going to quote unquote mint, let's just say 5 versions or 5 pieces or NFTs that are related to a NBA highlight. So think Steph Curry shot from half court to win the game. They were only minting 5 of these. And for those that want to buy this, they will own an NFT, so a digital version of this highlight reel that they can link back to say, I am one of the 5 owners of this highlight. Okay. Now, what you want to do with that is up to you, right? But you have one of those 5 highlights that you can own. Now, there's a primary sale, which is the process of, this is the first time this is going on sale. It's an auction process. and it goes to typically the highest bidder. In this situation, some of these are trading initially at 25K. They are now starting to trade in a secondary market, which is I bought it, I'm one of the first 5. I bought it for 25K. Now I have another one and I want to sell it for more than 25K. What is it going to go for in the market? These are secondary transactions that are occurring, and we're seeing those occur depending on the rarity and the player, all the way up to 50K, 75K type trading. All in all, NBA Top Shots has traded in the last 7 months, 300 million in transaction amount, notional traded. It's a big number in 7 months. And this is, to Sean's point, the first iteration. There's a lot going on with people that are buying these NBA highlights. So Sean's question is, can this current market sustain this price action at these levels for essentially buying a video clip? Which is a great question to ask. The other use case that has gotten significant news coverage is it's the Beeple 5,000 days digital art. That was traded through Christie's in a primary sale for 69.3 million, which is the third highest trade for an art piece by a living artist ever, full stop. Can this market sustain that type of price activity? So, to answer your question, Sean, I don't know, but I think the use case is here to stay. And if I had to say where we are from an internet comparison perspective, I'd say we're in 1996.
I think the one quirk about it that I find is that there's really, correct me if I'm wrong, but there's really no royalty or republication rights or anything that's associated with the ownership of that NFT. Like the clips that the NBA are selling are available on YouTube for free. This digital version that Beeple is sold is effectively out. Images are out there and are circulating rapidly. Now, one person owns the official digital version, but it's not like there's a reprint right or royalty that gets paid back to it. So there's no effective annuity or value beyond the intrinsic value of holding it.
Well, so there's a million Mona Lisa pictures as well, right? So what's the difference between the original and the Mona Lisa? I don't know, but the Mona Lisa is priceless. So the whole art side, question marks, right? Because art is an emotional thing, very difficult to value. Whatever the value is whatever someone's willing to pay for it. That's what Mark's kind of valuation metric is. I will say on the royalty side, there are new, I'm not talking anything pre today. Going forward, any digital art pieces, not any, you do have the functionality to have a royalty struck within the NFT such that any subsequent transaction after the primary sale, the creator of the NFT, whether or not that's an artist, a brand that's collaborating, an athlete, they can strike a 5 to 10% royalty on subsequent transactions. Or said differently, if I'm an artist and I sell a $1,000 painting to Sean, and then next week Sean sells the $1,000 painting to Tariq for $5,000, I as the painter get 1,000. That's it. I don't get any subsequent transaction. The difference between the 1 and the 5 or the 4,000, that all goes to Sean. Now, in the physical art space, I can't track that royalty. There's no way you can track that today. With NFTs, you can write into that if it moves from one wallet to another wallet at any transaction price that is stated on whatever that the smart contract list as the transaction value, I can strike 10%. So me as the artist, I would receive $400 in royalty from the sale of Sean from 1,000 to 5,000 to Tariq. So that functionality is happening. And part of the reason why I view that art is going to transition into this is because that can happen without question. It happens automatically and you can't fraud it. Got it.
Okay. So that gives me some value, as it were, to the concept of the NFT beyond that. Thanks for the insight on that.
Sure thing.
Elliot, I have a question. I'm just going to stick my neck out saying it was great listening to it, but I have no idea what you guys were talking about. So can we back up a little bit and give us a general intro for maybe 5 minutes as to what NFT is, or not NFT specifically, but I thought this was about cryptocurrencies, and I appreciate whatever we talked about was part of crypto, but just give us a general background and build it up from there. Sorry, Sean, I guess you know more than most of us, but I know a lot of our colleagues don't know enough about crypto to start with.
Yeah, so that's a pretty broad question because we can go many routes on this. So, generally speaking, a cryptocurrency is just a digital representation of something. Okay, what is that something? When you put the crypto in front of the currency, does that mean anything? No. So you have to look at the use cases in order to properly understand this. Okay, if you take a step back, when you think about Bitcoin, which is the number one, everyone here is aware of Bitcoin, generally speaking. Bitcoin is the very first use case of blockchain technology. The only reason why anybody in 2021 is talking about the word blockchain or Bitcoin is because Bitcoin is trading at between $50,000 and $60,000. It's a $1 trillion global asset. It has not made one transactional error and has not been hacked. And it's been operating since 2008. And that is why we're talking about this now. Can you imagine if you could make that comment that there have been zero transactional errors in any financial organization, or just any organization with finance, which is everybody, right? This is why we're having a conversation about Bitcoin and blockchain, because it hasn't made mistakes and it hasn't been hacked. So Tariq, to answer your questions around kind of these use cases here, Bitcoin is being viewed as a speculative store of value. It's being viewed as a ability to transact payments. It's being viewed as a anti-inflation treasury management asset, i.e. safer than the US dollar. And it is driving the conversation of this technology into every single company, full stop. And if companies aren't looking at this, I say this all the time, I took significant career risk when I came into this space in 2018. The career risk narrative has now flipped. Anyone who is not at least looking at this, and generally speaking, having conversations like we're having right now to understand what the use cases are, you don't have to adopt it. Just understand what the use cases are and see that you don't have to be a first mover, but you certainly should be a fast adopter, because what we are seeing in the companies that I'm speaking with on a daily basis and the use cases, they're coming fast. They're coming from all areas. It's coming from governments, top down from a regulation perspective. It's coming from Fortune 10, Fortune 100, corporate strategic groups that are looking at it from a top down perspective. And then finally, from a bottom up, all the innovation, all the entrepreneurship, all the people, and I literally mean this, every single step of your day today, anything that you went through, every single piece from the moment that you woke up to us having this conversation to what you're going to do right after is being challenged by an innovator that's saying that can be done faster, every facet of life. And so these facets of life, I believe, are being led partially by what blockchain is. It is building a new foundation similar to what the internet built for us back 20 years ago. This is the next iteration. And we don't understand what all the applications are going to be because the foundational layer is still being built.
Elliot, for Tariq, maybe you could give a quick primer on just the concept of a encrypted distributed ledger, which is kind of the foundation of this stuff?
Yeah, so blockchain is a version of, as what Sean says, distributed ledger technology, or DLT, right? So this is getting a little bit into the technical mechanics, but I'll try and keep it as high level as possible. When you think about something like the New York Stock Exchange, everything that we deal with today, everything that you as finance people deal with is essentially in a central ledger. Whether the bank owns your central ledger, whether you have an internal accounting system that is your internal ledger, central ledger, whether it is any of your partners or service providers, you have some sort of central ledger. The whole concept is there's one place to go for your source of truth. And that's what you use to go and do your audits, to run your numbers, to validate that wherever you think you are from a company perspective, you are. Where do you go? You go to a central place in order to make sure that's the master version. If something's screwed up somewhere else, doesn't matter. If it's this central ledger, this is our single source of truth. Okay. So that's the centrality comment of it. There's a couple weaknesses in a central ledger perspective, right? What happens if someone that has access goes and messes around with your central ledger, and then you can't reconcile it to know what is the single source of truth anymore, right? That's the problem with a lot of technological situations today. So blockchain has come in and said, we are going to have a distributed ledger, or it's going to be decentralized. What does that mean? The easiest way to describe it is everyone on here, there's probably 20 of us on here on this chat right now, and we were all on a group text, and we all said, hey, I am going to wager that UCLA is going to, since we're in March Madness, they're going to go into the Elite 8 game. UCLA is in the Sweet 16, they're going to Elite 8. And I will buy everyone here a dinner if they don't make it. And UCLA goes and plays, and then they lose. And then I delete the text saying, well, I didn't send that text. Well, all of you have that same text message stream. And all of you can say, well, yeah, you texted that to all of us. So because I deleted it from mine doesn't mean that that's what the single source of truth is. The truth is that everyone else on the text message stream can see that I texted that. So that concept is the difference of distributed, because each of you have a single source of truth that you know that is unaffected by my ability to delete a text. Does that make sense? Right? So, and that's not getting into any of the tech, but broadly speaking, because blockchain has not had any errors and it hasn't been hacked, think of it as having 100+ of these same ledgers. And the reason why and everyone has the same information, right? Each ledger has the same information. And when someone tries to go and hack it, they have to not just hack one, they have to hack all 100.
Elliot, I got a question. So maybe, is there like Chase Bank or Chase Morgan is moving heavily into buying Bitcoin and cryptocurrency. What use case what are they looking to do with cryptocurrency? How are they looking to move the market so that more people are finding it acceptable? Does that make sense?
I believe the question is around how major financial institutions are allowing their customers to get access to buy cryptocurrencies. Is that the question, Joe?
How the customers are going to use it, and how Chase is going to take advantage of that, or using that as a monetary purchase for anything.
Yeah. Okay. So there's two use cases here to bifurcate. Okay. The first one that you're kind of mentioning, Joe, is are we going to be in an environment where every day, instead of my credit card, because no one uses dollars, no one uses paper money to transact anymore, right? So we're in a we all agree that we're in essentially a digital execution transaction method, the majority of it being credit cards, right? We're seeing some Venmo and Zelle and some of that activity, but generally speaking, we're in a digital world, okay? Are major financial institutions allowing their customers to transact off of credit cards and onto cryptocurrency, what's called payment rails, right? So that's one question. The second question is JP Morgan specifically, what are they doing to leverage blockchain, the technology, which I think is one of the most exciting things that's happening in finance. So I'm going to take that's the second part. The first part, so if you think about when did credit cards come into the space as our primary method of transacting, right? It probably happened in the early 2000s timeframe, right when people got comfortable with buying stuff on the internet, and they said, oh, okay, remember that? No one was comfortable with buying anything on the internet. I would never do that. At some point, consumers' buying habits changed, and those habits changed to, well, it makes a lot more sense for me not to have dollars, physical dollars and coins, and so I'm now going to transact electronically. So, early 2000s, that's what, 20 years ago. So it took us 20 years to get to this moment. The question is how quickly are we going to get from big fat Visa and MasterCard and American Express charging 3% on both sides from the credit person and from the merchant down to something that is smaller, right? And so these groups are very happy. They are making a ton of money, and they aren't having to do much because they are the primary payment rail of American citizens. The best way to answer your question here, Joe, is both Visa and MasterCard have announced significant initiatives in which they are now considering how to transact in a digital asset form. Okay, so if the major credit card processors have publicly made announcements, and they just happened, right? So it's not like they did this 5 years ago. This is like in 2021, they made these announcements. I would expect that within 2 to 3 years, maybe 5, that every person on this phone on this call right now will have a digital wallet. Whether or not you know it or not, whether or not it's called that or not, I think everyone on here will have that. So that's one question. I think groups are seeking to allow companies, their customers, to be able to transact in the space. Is it going to happen on a daily basis? No, it's going to take time to get there. We're probably 5-10 years away from that happening daily, but it's just starting to happen, i.e., let's fill out credit card forms from 25 years ago in order to get a credit card application. Just quickly on the JP Morgan coin, it's a misnomer because it's not a coin that you can buy and sell on the market. What it is, and very fascinating for everyone on the phone here, JP Morgan coin is essentially looking at every single one of their bank account holders and are saying, once your assets enter the JP Morgan ecosystem, at entry, I am going to essentially flip them into JP Morgan coin. So dollars, euros, yen, wherever, South African rand, wherever you are, it flips them into your JP Morgan coin, okay? Why is that important? Because if you're a multinational organization and you are trying to send a wire payment from one entity to another entity, you're going to incur FX fees and you're going to incur wire transaction fees. With the JP Morgan coin, the intention is once you've come into the ecosystem, you can now settle in coins, i.e. you're not sending actual dollars across wire, you're not sending euros across wire, you are settling within this JP Morgan settlement tool. And by doing so, JP Morgan is not charging you wire fees and they're not going to charge you FX transaction fees. And I'll just let that sit for like 2 seconds. These are the biggest, fattest margin businesses that you have seen from arguably the largest global financial institution that we have. And they are looking at leveraging blockchain technology to remove wire fees and FX fees for their customers. And they're able to do that because they're leveraging the technology.
Hey, Elliot, that's Rodney. I got kind of maybe a question, a misunderstanding or whatever, but when you were talking about the credit cards, and then you were kind of jumping to Bitcoin and this and that, one of the things, and again, I'm not as adverse in the knowledge as you are, and I'm just trying to get an understanding, but with the Bitcoin, there is a valuation element to this, that if you're relating it to credit cards, the credit cards don't change in value. If I buy something for $5 and I owe $5, it's $5. But if I'm using Bitcoin, there's always a valuation element where it could either go up or go down. I mean, we hear about all these people who today buy $10 worth of Bitcoin and tomorrow might be worth 15 or might be worth 7. And so that's where I have a little difficulty reconciling the acceptance of this on, say, such a national scale, because there's nobody that can really, again, in my opinion, my ignorance, I'll admit, say this is why it's going up, this is why it's going down, who's controlling it, who's not controlling it. It's just like, to me, LIBOR. Everybody thought that was a kind of a free-flowing rate that people would, tag as an interest rate for their debt. Now we find out that basically 3 guys in the back room on telephones were jury rigging the rate. So, you kind of go like, okay,
Yeah.
well, now we got SOFR. So we'll see we go. But I think you kind of get where I'm kind of going.
Absolutely. And Rodney, it's a fantastic question. It really is.
I get, because, and for you guys, I kind of saw some people looking up like, I don't quite get this, but think of this with blockchain. Let's say somebody puts a purchase order out there to buy, I'll just say a car for $10, and you want 4 wheels. The person you're buying it for then has to interact with your ledger, and it has to match exactly. You can't have 5 wheels, it can't be $25, whatever. And if it doesn't match, the transaction doesn't go through. And that's what makes blockchain so unhackable, if you will, because it has to match. And it's usually between 2 people that are trying to match it up. And it's a wonderful thing. We've had a couple of demonstrations with some of the other chapters, and it's just absolutely fantastic. But I still have the Bitcoin.
Yeah, the valuation question.
Yeah.
So there's a couple of things. When Bitcoin first came out, it was just a test project, right? No one knew that it would become this, right? So then the question became, all right, well, what is it? Should I compare it to gold? Should I compare it to dollars? Should I compare it to credit cards? And everyone started conflating, yes, no, yeah, it can be used for this. So where are we today in 2021? Bitcoin is not acting as a method to pay for transactions. It's not a payment rail. Nobody is going to go to a dinner and say, I am paying you in Bitcoin. I don't think that's going to be a use case we will see. The use case that we're seeing is that it is a store of value, i.e. people are treating it much more similar to gold, and even using the word digital gold, which may or may not be a misnomer. But when you think about all the Bitcoin that is available right now, 75% of them are quote unquote long-term holds, or people like me who have put them in a wallet and haven't looked at it since we bought it. That's 75% of the supply. So only 25% is being used as investment or is being used in the broader ecosystem, okay? So Bitcoin as BTC, what it is in my opinion, won't be a daily transaction mechanism. Now, that being said, there are some fantastic daily transaction mechanisms that have come into the market, because there is a place to be able to transact. Because look, again, the bogey that we're dealing with is 3% on both sides, from the merchant side and from the consumer side. So if you can shrink that down and say, I can charge 1%, that's still a very healthy business in a massive $1 trillion payments business, right? So things like stable coins, albeit, you know, they're like a hedge, they're like an FX hedging mechanism, to be able to lock in the rate of something like Bitcoin to something that is more familiar, that people recognize on a daily basis: gold, euro, dollars. So there are a basket of those, right? So in the market today, there are very many reputable stable coins that allow people to, when they are buying and selling Bitcoin, to be able to use that, transfer that into another digital asset, and be able to use that digital asset for either transaction purposes or many times financial settlement and accounting mechanisms. So this whole concept of stable coins have come into this discussion, particularly to answer your question, Rodney, which is, I don't want volatility when I'm making a payment. I want that when I'm making an investment. So remove the volatility and allow me to leverage the technology. That's the intention of stablecoins.
Yeah, because I think that's one of the problems that, again, for a layperson like me, is that we hear about it over here, we hear about it over here, but nobody says, okay, this is what we're really doing in the middle. Okay, to me, what you just said is that we're stabilizing the currency around the globe, and then by eliminating foreign exchange to some degree, that we can have this electronic currency, which, in my opinion, makes a whole lot of sense, and it makes it far easier to transact commerce, where you're not worrying about, well, if I buy an engine from Mexico versus Germany, I can get 5 engines from Mexico and 1 engine from Germany. Well, it doesn't do a lot for, the core competency of that particular country. It also basically doesn't help the poor Mexican people down here, who's actually putting in just as much value into their engines as the one in Germany. So to me, I think it's a great deal. And the sooner we implement something like that, the better. But got a lot of egos around the world to convince we could do that, So yeah, but thanks.
Absolutely.
To
How
that
are
end,
you? Your hand or ask a question, whatever the case may be. Diane, you're next.
Hi, how are you, Elliot? Thanks a lot for introducing what's a very cryptic cryptocurrency debate floating around. My apologies for lack of video, I'm traveling. But I think the main question for me in my mind is, are we gonna wake up one day and see our Bitcoin poof because somebody hacked the algorithm? That kind of always falls into play as a humorous risk. But the truth of the matter is that part of the fun of crypto is that it's decentralized, so it's not subject to the devaluation and the inflation factors. But part of the risk is also the decentralized, because there's very little controls that we can execute from a credible perspective to really have full accountability of those ledgers. Because there's a lack of, domicile correspondence that we have with those ledgers. So when you're talking about a decentralized cryptocurrency and the debate around that, in advising to move part of the US dollars, which historically has been one of the most stable currencies, to something like this, the whole point of holding it in a domiciled currency is that you know exactly what it's worth, right? The most liquid form is supposedly your currency, your flat dollars. So where cash is not king because you have these uncertainties around currency, how can we mitigate the volatility, and is there a hedging instrument against the potential pitfalls of the Bitcoin scenario? overvaluation, because I do agree with Sean. It's in a lot of cases kind of incredulous to see some of these values fluctuating, even on the EFT circuit. So where I'm not a novice, I just have a looming series of questions with regard to advising folks to take their $25 million or $10 million in cash. What functionality how do we de-risk that strategy of putting dollars across different currencies outside of a full hedging portfolio, which they currently have already? Sorry,
Yeah.
that was a multi-part risk, but question, but it's
No.
kind of the nature of the beast, right?
Yeah, and it's one of the biggest topics of discussion now. I'll answer your first question in terms of what's the risk the thing goes poof, magic internet money goes to bust, and anyone that put in money into Bitcoin goes to zero. In 2018, I would have had a very different answer for you. I would have said, you could be right. In 2021, so there's two answers to this. One, what is the risk of hacking? And then the second one is, what is the risk that everyone just stops using it and there's no more demand in the market for people to want to own Bitcoin, right? So I'll answer the second question first. What's the risk that there's no demand? I think it's zero. And I wouldn't have said that in 2018. I'm saying it now in 2021. I said it in 2025. The number of people that are involved in this, every single institution, Fortune 100, and every asset manager is involved in this. They're not telling you they are, but they are involved in this. Two examples, Jamie Dimon, Bitcoin is a joke. We would never deal with anything like that. Oh, in the background, I'm building JP Morgan coin, giving his firm a 2-year head start on everyone else. I mean, if that is not the biggest head fake in the world, I don't know what is, right? So what a lot of these headline risks you're hearing under the cover, these institutions have been buying since 2015, since 2016, since 2017. Certainly they're buying in 2021, particularly now, even though Bitcoin is at all-time highs in 50,000. So on the demand side, I think it's zero that it goes away. On the hack side, I don't, that's a tough one to answer. Many people say, is quantum computing going to come and be able to change this, right?
Manipulate values.
Right. So is that a challenge? Yeah, that could be a risk. That I don't have an answer to. I think that's a black swan event, probably similar to COVID. So is it a chance that it happens? Sure. How do people protect themselves from that happening? I think people are trying to figure that out, but it is a black swan event and is something that you can't say there's no risk to it. So I won't say that. I don't know of any solutions. We don't know what quantum computing is yet right now, so we don't know how to solve for that. But yeah, so that I know that's not a straight answer there, but it's one of those correct. It's an unknown.
I think the biggest problem is remembering your password.
It is a big problem, actually. So make sure you do remember it or have ways to do that. And there have been some horror stories from individuals and people, although custody, I don't know if you've seen all that's happened in the custody space. So essentially who from an institutional perspective is going to hold your crypto. You have groups such as, your Anchorages and Kingdom Trusts and BitGo's. Curve just got bought by PayPal. You had Fireblocks, which just got 113 million Series C investment. There is a lot of activity happening in the custody space in order for people like yourselves to feel good that you can pay a professionally managed custodian to make you feel good that your assets are safe. Think State Street, Northern Trust, Boney, all those groups. From a treasury management perspective, again, 3 years ago, 10 years ago, I probably would have said, yes, US dollar is dominant, not global currency of the world, not changing. The fact that we have printed twice the supply of N1 in 2 years.
Correct.
And I don't see any of that stopping. is the reason why people like Michael Saylor of MicroStrategy, which many of you haven't heard, NASDAQ listed company, 400 million in treasury management assets, invested 75% of his working capital from US dollars into Bitcoin as a treasury management strategy. He was getting slaughtered by many in the industry. You have to listen to his reasons for doing it in order to show what one may call a genius today, one may call a doofus tomorrow, but essentially his view is that as a treasurer and CFO, US dollars are inflationary appreciating or experiencing a 20% inflation year over year. This is in 2020. So his estimate was in 2021, he was going to see a 20% inflation rate. Additionally, he was a publicly traded company and his hurdle rate on his shareholder value of his stock was 8%. So he was looking at a 28% bogey on his dollars. And he said, I will not be able to meet any of these if I just stick in dollars. So for him, Bitcoin was an anti-inflation move in order to offset and be able to reach some of the goals of the company just from a pure financial requirements or financial targets perspective. I didn't say it as elegantly as he has. And it's much easier to be the first one in, talk your book, make you look like a genius, and everyone else come in and it goes down. But he is certainly looking like he made a strong decision. And there are a few other major companies that are following that Bitcoin into the treasury management strategy. And I wouldn't say go 75%, but generally speaking, all of those of us in the investment space essentially say if you were to put 1% of your investment portfolio in Bitcoin and you're looking at an endowment or a pension that is targeting a 5 to 7% return in 2020, if you would have put 1% in Bitcoin, generally speaking, you would have made up 1%, or I think it was 75 bips in return of your overall portfolio. If that 1% of Bitcoin went to zero, you would have lost about 10 bips of return in your portfolio, right? So your risk reward scenario can be significant. And those that were a mover in terms of allocating just a portion of the assets that they had have seen early success. That's not going to say that they're going to be here forever, but they have seen early success. Does that answer part of your question, Diane?
Quite eloquently, Elliot. And I think there's no real answer to some of the quandaries that we have, but I think from folks just using it as a hedging tool, in other words, to keep, which I think is the crux of your argument, many are using it as a hedging tool to offset the inflationary risk that the US dollar has been exposed to. And that's certainly a considerable metric. My second and tertiary thought is, number one, somebody is going to come up with a better wheelhouse, and it's just a question of time of who's going to come out to the crypto market and say, I'm your new FDIC equivalent within the crypto world to ensure against the risk, because at least you get sort of, a protection instrument of some play in the crypto space. And then lastly, the vaporizing move of a JP Morgan saying, okay, move everyone into this realm. And if you're stuck in Bitcoin, well, tough nuts, come on, now JP Morgan's worth X and you're down sinking in Y. That's kind of the two kind of offsets that I see playing out in the marketplace. And that's just from my, again, just looking at the possibilities of outcomes. But I agree with you, there's no short and simple answer to either one. But thank you for outlining your thought process. I agree with a lot of what you said.
Yeah, and just on your part of the regulation, I was on with a major government regulator today doing this. So not only are they paying attention, they are actively seeking to understand what is happening. They understand that they have a responsibility in order to properly understand innovation and not just say no. But there are unfortunately still a lot of headline reading that's going on. There are some stories. Look, I tell everyone another thing, just consider this. If the broader crypto market, which is 1.7 trillion, goes to zero today, blockchain technology underlying will still be, it will be like TCP/IP, which is the basis of the internet. We will all use it in almost every single facet of life. Even cooking, TCP/IP is used right now, right? Internet, anything that we do, we are all interconnected by Wi-Fi and just broader broadband connections. We're going to be making that statement about blockchain in 5 years.
That's a curious possibility.
And that's almost a good way. I mean, we're almost at 6 o'clock. If there are any other questions, I think that's almost a good way to close about the future. Elliot.
Yeah,
can everybody find the raise hand button, because a lot of people are having issues on that. If you can't, just I guess speak up if you have some questions for a few more minutes. I don't know, Joe, what time are we closing this?
Charlotte, do you know what time we're closing this?
Whatever time you want.
Normally it's about 1.5 hours, so we probably have, I don't know, depending on Elliot's availability, do we have time for 20 more minutes?
Yeah, I can keep going.
So guys, go ahead and shoot your questions either in chat or raise hand or verbally in the old fashioned way. Not in the crypto way.
Analog. Old fashioned is what people call.
Okay, I see a hand raised by Ty.
Yep.
Are you able to, you obviously found raise hand thing. So this is how it looks like, guys, if you're looking at it.
Yeah, it's the reactions button on the bottom. Elliot, I just had a question. I mean, what's your take on tethers? I mean, I think we all kind of lived through Bear Stearns, Lehman, the LIBOR manipulation scandal. I know Bitcoin's worth 52,000 today, but and that's a blend of different market rates. But I mean, could there be room for like a manipulation in the market right now with price discovery and with the lack of clearinghouses and regulation and settlement infrastructure?
Yeah, thanks, Ty. Is it Ty? Right?
T. Yeah.
T. Thanks, T. So I probably should have qualified this before. The bad thing, there's a dark side to innovation. There's a bad part to emerging technologies. And the bad part is 75% of the stuff is not good. Either people are doing it to just straight out fraud. You have people that are trying to make fast, not dollars, but fast Bitcoins or cryptocurrencies. Their intentions aren't in it to be there for the long term. I think, so that's 75% of the market today. That's 75% of the cryptocurrencies that you see, where or not they are ranked on the marketplace, top 10 by or on the crypto by volume. There's landmines galore. And so whether or not it was done maliciously or with intent, or whether or not they just did it because they just built it and it didn't make sense and it didn't work, and they're just too deep into it to be able to go, a lot of them just don't work. And I would never recommend that people use them. So without speaking specifically about some of those use cases, because my view is different than what other people's views are, but I think some of the ones in the tops, they're just disasters. I would never use them. I would never suggest people use them. They are built in not with the right governance and framework in mind. And there's varying levels of that, but just go in with thinking, and I'm only talking about cryptocurrencies, just go in with thinking 75% are bad.
Thanks.
What else we got? You guys haven't talked much about payments or remittances or FX or supply chain management. We can go into food and agriculture. We can go, I mean, fintech is just broad. Everyone here is on the finance side. We can go into healthcare use cases, identity, number of things. All right, I answered all the questions.
I think you might have stumped them, so yeah.
Well, I'll just add, and I'm just speaking to everyone on an individual basis here. I had mentioned at the beginning that this technology is very intimidating. It's difficult to, none of us went to school for it. There's no like, oh, you can go to this university to go learn. A lot of us are doing headline reading around it. So it's unlike anything that we've seen before in our lifetimes, but it is something that the career risk has flipped, and I mean that sincerely. I was on a call today with one of the larger organizations in the space that has grown from 80 to 540 in a period of 9 months. And the vast majority of that growth were major banks where people transitioned from various roles, accounting, finance, compliance, sell side, business development, have all transitioned into this space. I'm getting pinged constantly by people that are, I know in my old life that are now asking questions about the new life. We're only going to see more of this happening. So, I implore each of you to understand it, because look, I think as the environment changes, people are going to, with skill set, who at least understand how blockchain works, the settlement process, the payments process, the ability to speak digital assets. I may sound like I know what I'm talking about now, but it's taken a lot of time and effort to get here. And I'm still learning every single day, and I live this thing every day. So I do think that it is a moment that people should be embracing, and listening where you can to either podcasts or certain news sources that are showing what is happening in the space, because I do believe that it will be a part of each one of our lives here. And this is a moment to embrace it and get ahead of it. We're still very early. Like I said, we're having this conversation like it's 1996 of the internet, if anyone remembers that. So it's not a time to be discouraged because it's difficult. It's a time to embrace and say, let's get involved. And, for those that need, guidance or whatever, always happy to drop my email and happy to have discussions where helpful.
Thank you very much, Elliot. That's greatly appreciated. And I think we've learned a lot, or on the cusp of learning a lot.
Great. Thank you very much for having me, folks. Pleasure speaking with you.
Thanks, everybody.